there are two possibilities for your bank account. Neither of them is good. One is that your bank fails and you lose your money, right, or a portion of the money that you have on deposit. Alternatively, your bank doesn't fail because the government has bailed it out. And the only way that they could bail it out is if the Fed prints enough money to cover the cost, in which case you don't lose your money. It's still there in the bank, but it just loses a lot of its value, maybe most of its value. If the CPI says 5, it's more likely 10. So we have pretty high inflation, even if it's not as high as it was.
Renowned economist and chief global strategist of the Euro-Pacific capital has been warning about the impending collapse of the U.S. economy and the U.S. dollar for a while now. Schiff has used his many platforms to warn investors about the fragile, rigged-to-fail nature of the U.S. economy, especially the American banking sector. According to Schiff, last month's banking sector crisis is just the tip of the iceberg of what is to come. The renowned economist believes the crisis will return in multiple folds and drag down millions of investors and depositors around the country. In addition to the banking sector crisis, Schiff believes another gigantic storm is brewing for the U.S. dollar. This is no other than the fast-developing threat to the currency's hegemony in international trade. Since the United States and its allies announced a barrage of economic and financial sanctions against Russia for invading Ukraine, many countries around the world are actively trying to reduce their dependence on the U.S. dollar and the overall U.S. economy. According to Schiff, this poses a great risk for investors and depositors in the country. Not only are we witnessing a shift from a status quo that has been maintained for decades, but there are clear signs that a large percentage of the American population is shockingly unprepared for this brewing storm. Earlier in the week, Peter Schiff joined the Paul Barron Network to discuss the grim reality facing the United States. The renowned economist predicts massive price increases, severe recession, the end of the dollar hegemony, and a terrible banking crisis that could cripple the very foundation of the United States economy. Schiff also discussed the best solution for smart money investors looking to avoid the brewing storm. His simple yet brilliant fix is to invest in gold, one of the best performing assets of the past year. We will now bring you some insightful clips from Schiff's interview. Please watch the video to the end. Drop your comments below and subscribe to the channel for more powerful financial tips and important market trends. Thanks for watching and enjoy the video.
Yeah, first of all, the inflation that we're currently dealing with, the Fed has been creating it for more than a decade. You really have to go back to quantitative easing 1 in 2008, 2009. That's where the Fed really started the money printing in earnest. And we're dealing with the delayed consequences of that now. I mean, inflation by definition is an expansion of the money supply. And so we dramatically expanded the money supply. The consequence of that is prices have to now adjust to a higher equilibrium, given all the money that's now available to buy stuff. And so we've just started that adjustment process. And I think prices have a long way to go on the upside just to catch up to the inflation that's already been created. But I think paradoxically, one of the reasons that I think the CPI numbers are going to spike to new highs soon is all of this optimism that inflation is cooling down has caused the dollar to drop. And I think the dollar will continue to fall. It's now down about 15% from its high last year. But I think it's on the precipice of another major decline. I wouldn't be surprised to see another 15 to 20% drop in the dollar between now and the end of the year. And I think that dollar weakness, which is a consequence of people starting to price out some of the rate hikes that they had priced in fact, starting to price in the next round of rate cuts. Also, the Fed has quietly returned to quantitative easing while pretending they're still doing quantitative tightening. So all this is dollar negative. And what's going to happen as the dollar weakens, that's going to push up commodity prices across the board, oil in particular, but lots of other commodities are now going to be breaking out to new highs. And it was the pullback in those commodities that helped bring down the headline inflation numbers. But I think when they start soaring to new highs on the back of a weak dollar, that's going to help drive those CPI numbers to make new highs. No, the entire system is insolvent. I mean, thanks to government guarantees and government insured deposits and the moral hazard that created, and the fact that for better than a decade, banks were encouraged by regulators to load up on treasuries and mortgage-backed securities, which they now own. And now that the Fed has finally raised rates, this portfolio is underwater. So banks are sitting on huge losses that they're not really marking to market because they're pretending they're going to hold these securities to maturity. But they really don't have the ability to do that because the customers are going to want their money back because the money is losing value to inflation. And they want to take that money and do something else with it. I mean, some people might want to just buy treasuries and loan it to the government at 4 or 5% rather than leave it in the bank at close to 0%. So the banks are going to have to sell these securities, and they have huge losses, which they can't absorb. And so they're going to rely on the Fed as a crutch. They're going to try to deposit these underwater securities for par at the Federal Reserve and then use that money to repay depositors. But, the banking system is a disaster. And, your point about are bank deposits safe? No, they're not safe at all. They're in, grave danger. There are two possibilities for your bank account. Neither of them is good. One is that your bank fails and you lose your money, right? Or a portion of the money that you have on deposit. Alternatively, your bank doesn't fail because the government has bailed it out. And the only way that they could bail it out is if the Fed prints enough money to cover the cost, in which case you don't lose your money. It's still there in the bank, but it just loses a lot of its value, maybe most of its value. So yes, you can go withdraw it, but then take it to the grocery store. You're not going to be able to put much in your cart because prices are going to go up dramatically as a reflection of the loss of value of the dollar because the Fed has to print so money to bail out the banks.
In the wake of the 2008 global financial crisis, the U.S. Federal Reserve started a series of funding rounds to strengthen the ailing banking sector. Since then, the central bank has been charged with propping up the economy by printing more dollars. Unfortunately, the more dollars they print, the deeper the economy sinks, heavily weighed down by the rapidly declining dollar. According to Schiff, the seeds planted during the global financial crisis have germinated at an alarming rate, and everything is beginning to unravel fast. During the interview, Schiff also gave his estimated time frame for the full unleashing of the brewing storm. Though many experts agree that the United States will someday have to give up its top position in the international space, they believe that will not happen for many years or even decades to come. Peter Schiff disagrees. In fact, he believes the United States might soon be ousted as the world's central power. Here are more clips from the interview.
I think it's going to happen a lot quicker than people think. I mean, it's already taken a long time. We've been kicking the can down the road on this for many, many years. So it's long overdue. But, there's an old expression, how did you go broke? Well, slowly at first, and then all of a sudden. And I think that describes what's been going on with the United States. And I think that when the dollar crashes, it's going to happen abruptly. And the dollar's reserve status is going to be lost before anybody realizes that it's happened. And I think that the writing is there on the wall for anybody who wants to take the time to read it. If you look at some of the events that have taken place ever since we were foolish enough to weaponize the dollar and apply sanctions onto Putin, I think that really highlighted the need, a political need, for the world to move away from the dollar. I think they already had an economic incentive to do so, but then we gave them a powerful political incentive to accelerate the process to de-dollarize, and that is exactly what's happening. And, most people don't have a clue to the degree to which the United States depends on that dollar reserve status, because our whole economy is built around a service sector. But without imports, there's nothing to service. I mean, we're just a gigantic logistics center where we distribute merchandise that we import and then distribute it to the population. But if we can't import all the goods, well, then there's nothing left to distribute. I mean, the whole thing comes collapsing down. And how do we pay for $1 trillion a year worth of imports with our dollars? That's our trade deficit. It's $1 trillion a year in goods. And we pay for it just by printing money. But the money doesn't cost anything to print. It's free. But all those goods require the expenditure of significant resources. Land, labor, capital goes into the production of these goods. And we basically get them for nothing off of the reserve status of the dollar. And the foreigners who are selling us all this stuff, they just take our paper and they buy treasuries or they buy mortgage-backed securities. But when that stops and the dollar crashes, Americans are going to be too broke to afford to import stuff. And we don't have the capacity to produce what we'll no longer be able to afford to import. And so it's going to be a collapse in the American standard of living. And very few people are prepared for that. It's going to happen. You're going to see it through a massive depreciation in the value of the dollar. So yeah, the smart money is buying gold. I mean, they've been buying gold for years because this train wreck was obvious for years. But now, it's happening. Gold is, I think, this morning at 2,040. I think it's headed significantly higher from here, multiples of its current price. And if people were smart, they would take their money out of the bank, their long-term savings. I mean, obviously, if you need money in the bank to pay bills, short-term operating cash, yeah, leave it there. But for longer term, don't leave any long-term savings in the bank because you're going to lose it. Either the bank's going to fail or the money's going to fail. But either way, you're going to lose. So you got to take your money out of the bank and do something else with it. You can buy gold and silver because it's much, I think, safer than owning cash. Or you can invest it. That's what I've done. I mean, I have both. I have gold and silver, but for myself and my clients, we own good dividend-paying value stocks all around the world. These are real assets that are going to retain their value as money loses its value. And if you own a good business that has real assets and that sells products and services that customers need, then you can raise your prices. And you can maintain your margins in an inflationary environment, and you can raise your dividends, which is what I'm counting on. And since the income that the companies that I invest in are earning is coming from outside the United States predominantly, so it's coming in other currencies, which I expect to rise versus the dollar, then my dividends will go up for that reason as well, as you translate them back into cheaper dollars.
Despite its notoriety for always failing to admit the obvious, even the U.S. government is aware and cautious of the threat to the dollar hegemony. Earlier this week, in an interview with CNN, Treasury Secretary Janet Yellen confirmed the threat to the dollar's dominance was intensified by the sanctions against Russia. She said, "There is a risk when we use financial sanctions that are linked to the role of the dollar that over time it could undermine the hegemony of the dollar. It creates a desire on the part of China, of Russia, and of Iran to find an alternative." The Treasury Secretary added that other currencies do not have the same qualities that made the dollar a global currency, but a critical look at the economy that backs the currency will reveal that her faith is misplaced. On the other hand, Schiff counsels making solid investments in gold and silver, both top risk-off assets with proven track records of outperforming the markets, especially during periods of increased uncertainty and economic downturn. What are your thoughts on Peter Schiff's interview and the overall gloomy state of the United States economy? Do you think China and Russia will be able to successfully navigate the end of the USD hegemony in global trade? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more important market updates. Thanks for watching.